All right, folks. So I want to make a quick video on the on one of our rules that we have here in the Discord. This is coming from Really21. He asked a really good question here. He says, based on the 2.5% rule, does that mean one position shouldn't be greater than 2.5%? Or could I still DCA into that position, making it greater than 2.5%? The first thing I want to say about this is, guys, there's no, like, the rules are the rules. The rules are there to help protect you guys and help you guys stay disciplined, right? If you're trading, if you're investing and you don't have a plan, you're just throwing darts at a board with a blindfold on, right? We need to have a plan. So we do have this rule in here. It's a trading tip. Okay, never exceed more than 2.5% of your total portfolio on one trade. Look to average down if the position declines 20% or more. So what do I mean by that? Okay, so when we come over here to the chart, let me just go back to a name like Ethereum here. Okay, so let's just pull up Ethereum and see what the chart says. Okay, so again, that rule says to not invest more than 2.5% of our total portfolio in one trade. So where are we taking trades? Well, we're taking trades based on our buying strategy, right? So we have our monthly alert and we have our weekly alert. Okay, and the green dots are our buy signals. Okay, we want to buy when the blue wave is down here, given a green dot here on the weekly chart. Okay, that came back there for Ethereum at $1,500. It went all the way up to $5,000. This one came right here in September. Okay, that went from 2,000 all the way up here to 4,000. This one down here came at 1,500, went all the way up to 4,000. So again, we can zoom out of the chart and see that the best time to buy Ethereum is when the wave is down here, given a green dot. Okay, those are the best times to enter, and these are not overnight signals. Okay, these are 1 to 6 month swing trades. Okay, and if you guys are not familiar with our trading strategy, I do have a free trading course over here inside of the Discord. Okay, you guys can learn all about these trading rules, all about our indicators and how they work, right there in the free trading course. But again, where we enter is on a weekly signal. Now, these signals do not come around every day. So let me just show you what's happened here over the last year. So Ethereum back here got one right here in 2025. That was December at 2,700. Okay, and again, did it go up? No. Is there an indicator that's 100% all the time? No. This indicator is about 80%, 80 to 85% on a macro time frame. If you're looking right within probably a 1 to 6 months. 1 to 6 month time frame like we do here, it's probably 80 to 85%, right? Boom, that was a huge trade. Boom, that was a huge trade. Boom, that was a huge trade. Boom, that was a big trade. Okay, so this one in December didn't work out for crypto. Okay, this was a bull trap. Okay, a bull trap is when people think we're going back up and we end up going down. So that was a bull trap back here at the beginning of 2026. Right, so we're down here now. But what do? Right, so if we're using that 2.5% rule, we should never exceed 2.5% on a single position on one of these signals. Right, so 2.5%, 2.5%, 2.5%, 2.5%. You now have a 10% Ethereum position right now, if you decided to buy on every single one of these signals since December. So again, these signals don't come around every day, right? These are long-term swing trades, meaning, yes, we're 1 to 6 months out on all investments. Okay, that's very clear in our trading rules, meaning when we buy, we're looking 6 months out, guys. We're not looking for right, Ethereum to go back from here to here, right, the next day. It takes weeks, right? This move right here back in 2025, that was at 1,500. Okay, it went all the way up to 5,000 in August. So from April to August, that was a 5-month buy and hold. Okay, and you made 200%, over 200%. So if you entered here in December, you're now 8 months in, and yes, we're down, but we're still continuing to build the position, right? This has only been an extended bear market, right? These happen every so often, right? These long extended bear markets. I mean, we've gone down since August, right? Since we got our sell signal right here. Okay, so we called the top of Ethereum. We sold all of our crypto up here in September. Okay. Did we start? I didn't buy Ethereum right here. I actually started buying Ethereum right here at around 1,900 off of this signal. Okay, I actually didn't enter Ethereum on these. I entered a couple other ones like Chainlink in December, but my Ethereum position started right here. So again, if you're building your position this whole time over the last 8 months, okay, instead of being scared out of the markets and running for the hills, okay, 1, 2, 3, 4. You had 4 opportunities to add that 2.5% position. And you said, right, you asked, right, should it be greater? It just depends on how you feel about the trade. Right now, if I was buying Ethereum, my Ethereum, I am buying Ethereum. I actually bought it here and I bought it here. So I bought it twice since March. And again, these signals don't come around every day, guys. These come around like I mean, you pretty much get one good time a year to buy your asset, generally, right? Generally, when we're in a bull market, okay? But we've been in an extended bear market here. This kind of market is the market that gets everybody out. This flushes everybody right out of the markets, right? Everybody's quit. Everybody's having a bet. Like, if you look at the cheat sheet, we're like over here, right? We're right in despair. So, again, these type of markets don't happen all the time, but they do. And that's why we have rules like this in place. Because, again, if you would have went all in, right, if you didn't use the 2.5% rule right here on Ethereum and you went all in, so let's just say you had a $10,000 portfolio, right, and this thing dropped here on this signal down 50%, well, you just cut your portfolio in half. So if you divide by 2, you'd have $5,000 if you entered here. But if you only put in 2.5%, so let's just say you do have a $10,000 portfolio, okay, whatever your portfolio is, all you got to do is multiply it by 0.025, okay, and that's $250. So again, $250, $250, $250, $250. Okay, you do that 4 times 4. Okay, now you have 1,000. So 1,000, if you have a $10,000 portfolio, your position size is 10% now. Okay, and your average cost shouldn't be up here at 2,700. If you bought it here and here, okay, it should be somewhere around 2,100 now. So if Ethereum now goes back up here to 5,000, right, you're going to be a lot happier because you were buying the whole time, right? I know it's been a long, drawn-out bear market, but again, you got to learn how to last through these. You got to learn how to have patience, okay? Because if you believe in the asset of Ethereum, if you believe it's going up over time, you shouldn't care if it goes lower. Warren Buffett said you should be happy when it goes lower. So again, it's your preference. So like right now with Chainlink, like I started buying Chainlink here at 12, okay? Am I mad it went down here? No. I mean, does it suck in the short term? Yeah. But I believe in this asset over the long term. I don't think this thing's going to top out here at 30. I think this thing's going back up here to 50 to $100 one day. That's why I'm buying it. Okay, I wouldn't buy this thing if I didn't think it was going back to all-time highs, which is $53, right? I believe this is like a $100 coin one day, and that's why I'm buying it, right? I don't want to buy things that are just barely going to go up or you know, don't have, you know, a lot of potential to grow a lot over the years. So again, 2.5%, 2.5%, 2.5%. Where I will only average down, though, most of the time is just when it declines 20%. So this was a average down opportunity for me on Chainlink. And again, you can zoom out of Chainlink and see every time this wave is down here, it's the best time to buy. Okay, it might not feel like it right now, okay? But when this wave comes back up here, when the blue wave comes back up here, this is when things are exciting. This is when we want to sell, right? We want to sell these big moves to the upside, right? I mean, that happened in 2 months. This thing went up 150% in 2 months. So 150% here for Chainlink is sitting at, right, $21, right? And that happened in 2 months last time. So what is today? July, so August, September, we could be sitting back up here at 21. We can never time the move. We just got to play it smart, right? All we know with our strategy is that when the wave is down here giving us green dots, we're planting seeds, right? If we're farmers, we're in the field, we're planting seeds, right? Plant. Planting a seed, 2.5%, 2.5%, 2.5%, 2.5%. And when this thing rips back up here, like it has always done, okay, it always comes back up here. It always does, right? Markets don't go down forever, guys. Nothing goes up forever. Nothing goes down forever. Okay, in my opinion, for crypto, we're in this kind of a market right here. We're down here doing nothing, right? We haven't moved since we bottomed right here in February. Okay, we haven't broken structure. You see that low we made in February 2nd. We haven't moved since then, right? We came down here and tapped it, and now we're reversing. Okay, but it's a great question because the 2.5% rule is a very important rule. Again, you don't want to go all in on one dot, right? You want to play it smart. Okay, what if the market goes against you like it did here in December? Okay, it did for me. Again, I'm not a 100% trader. Okay, but I have a plan in case things do go lower, right? It's all laid out over here. The plan's laid out. It tells you exactly what to do when things go down. When the position declines 20% or more, we look to average down, right? We're not looking to panic sell down here if our position goes down. We want to buy more. So my average cost went from being 12 down here to like, okay, $9 or $10. So when this thing goes back up here to 20, $30, I'm not going to care that I bought it here or here because from here, that's even 100%. But now that I got the opportunity to buy even more down here twice, one in February, one here in July, okay, I'm going to be a lot happier now than just buying right here because I got to buy the position lower. Again, Warren Buffett says you should be happy when your position goes lower, okay? Now I have the opportunity to make 250 to 300%. That's just if we go back to 30. If we go back to all-time highs up here at 50, that's even more. So 2.5%, 2.5%, 2.5%, 2.5%. I typically only like to average down if the position's down 20% or more. So this drop on Chainlink, when I bought it right here at 12, that was a 40% drop. So of course, that was more than 20%. Got a signal, average down. Got another signal, average down. Okay, and now, okay, we didn't panic sell, so you can't lose, right? Just because it went from here in December all the way down here in July doesn't mean we're in a losing trade. It's only a loss if you sell. Do you guys understand that? It's only reported on the books to the IRS, to the government, whoever, if you sell. If you never sell at a loss, you never lose. Okay? If you get into the markets, if you get into these markets thinking you're never going to be down on a position, you just need to walk away right now because that's not going to be the case. Okay, you're going to go, stuff's going to go down. The important thing is to have a plan. That's why we have this plan over here, guys. I go over the whole thing over here in the free trading course. It's completely free. You guys can check it out. But that was a great question about the 2.5% rule. Again, we just use it as a place marker because, again, if the market does go against us, and we're going to be wrong sometimes, okay, this signal was false. Okay, that was the first false signal. I mean, none of these signals were truly false if you just wait it out. And again, I tell people all the time, the only thing that makes you right or wrong in the market is time, right? The only thing that makes you right or wrong in the market is time. Like right here in June, if you would have bought Chainlink back here June 2025 at 11.50 and it went all the way up to $28, okay? Again, that was a great trade. We traded that last year. Made a bunch of money on Chainlink last year. That's 150% up to the top. But if you didn't sell, it's not a win. It's not a dub, right? It's not recorded as a gain. And now you're at a loss. So just keep that in mind, guys. The only thing that separates you from being right or wrong in the market, 95% of the time, is time. It's time, okay? And we have rules that allow us to be right when time is on our side. And time is always on our side when we're investors, okay? This market, I know the crypto market sucks right now, guys, but in 2 months, we could be back up here at $20. Ethereum could be back at $3,000 and very fast. Right? We can have a very fast move back to the upside, and that will change everything. Everyone will be back in the market, so on and so forth. The important thing was we were buying this whole time, right? We bought, and bought. So again, use that 2.5% rule. You don't have to cap the total position at 2.5%. You can add 2.5% on every single one of these signals, okay, depending on how convicted you are on the position. So hopefully this answers your question. Again, that's a very good rule. And then that also allows you to be diversified. Okay, I'm going over my portfolio here pretty soon on YouTube. I drop a video on YouTube every Monday going over my portfolio. Okay, but that allows you to be diversified into more than just one asset. Like you guys can see, I'm holding I currently hold 47 positions right now. Okay, some people might look at that and be like, oh, that's crazy. But that 2.5% rule allows you to do that. It allows you to be diversified. Okay, if we were just stuck in crypto all year this year, right, as it just went down, down, down all year, okay, that would suck. But we were diversified into things like Circle, into Alibaba, into Path, into GoodRx, into Intel, into ServiceNow, into Robinhood, right? We buy stocks and crypto. So sometimes stocks will go up and crypto will go down. Well, all your stock positions are going to be up at places where you could be taking profits, okay? Where you could be taking profits, and then you can roll it into positions like this. So it just allows you to be more of a money manager when you use that 2.5% rule. You can bump that rule up to 3% if you want. You can bump it up to 5% if you want. Okay, I like to use the 2.5% rule. It's a good place marker, and it really takes away all the anxiousness in positions, because I tell you guys all the time, there's only two ways to feel bad about a position that you're in. Okay, there's two reasons you have anxiety about a position. The first one is you don't know what you're buying. You don't understand what the company is. You don't understand what the crypto is. Maybe you're buying a fart coin or a butt coin or something stupid, a penny stock, right? You have no idea how they make money. You have no idea if they're a credible company. You have no idea what they do, okay? You're going to get anxiety about that position. That's like buying a real estate house, okay? That's like buying a real estate house and you've never even seen the property. right? You're just like, here's the cash. I don't want an inspection. I don't want to look at it. Here's the cash. Take it. You would that would be a big red flag, right? You wouldn't do that. It's the same thing with stocks. You need to know what you're buying. So that's the first reason you have anxiety about positions, about your stock position or your crypto position. The second way you get anxiety about a position is your position's too big, right? You have a huge position on, it goes against you, and now you're just freaking out, right? That's because you oversized your position. When you use the 2.5% rule, okay, it takes away that anxiety because your position's not that big. You can tell yourself that, hey, okay, if this thing does go down 50%, which doesn't happen very often, right? This very rarely happens. Okay, I mean, it happens probably once every 4 years. This signal is wrong, okay, like it was back here in December. But this one has been right so far, right? We're still sitting at 8.5, okay? This one, same spot, okay, $8. So we've gotten 2 since February. But the thing is, we're just going sideways right now. So we're understanding, hey, where are we in this market right now? We're in this phase, okay? We've already sat through this, okay? This right here was in December, okay? Okay, we looked like we were going up, boom, bull trap, nope, back down, okay? But what are we doing down here? We're continuing to build a position, right? February and July gave you a chance to buy Chainlink here. Same thing with Ethereum, okay? You had an opportunity here in March. We called the bottom in March. Yes, it went down to 1,500. After it hit 1,700, it went down another 200. But again, our goal is not to be exact, guys. We're not going to be right on the button. We're not going to get Ethereum right there at $1,704 $1,510. Okay, we're not going to be exact. We just want to get close. Okay, if we're buying right here at 17,000 and it goes down to 15, but it goes back up to 5, it ain't going to matter. We're going to be happy either way. That's like a couple percent you're talking about here. Okay, so we just want to get close, and that's what the signals allow us to do. Hopefully this answers your question. If you guys got any more questions, feel free to check out that free trading course over there. Leave a comment on the video. I look at every single comment. Hopefully this helps you. Hopefully this helps you out. Teaches you a little more about the trading rules and that 2.5% rule, dollar cost averaging, and being diversified in your portfolio. So, like I said, if you guys have any questions, drop a comment. Thanks for watching. Peace.